Good afternoon to you, Patty. Good afternoon to you, Julian, as well. Thanks for joining us, guys. We're going to have a look at the charts this afternoon, see what's going on. We had an absolutely explosive day yesterday. To be honest with you, not that I can say that I absolutely crushed the markets. Unfortunately, I did not. We got a nice short in the Dow, we got a nice short in the Nas. It was a great return, but then ended up handing back a 0.25 trade late last night, thinking we were done at around minus 2.8% off the top of the Nas 100. As it happens, we weren't anywhere near. There was another percent to be lost in the Nas. Incredible moves down. And this all comes about from recession fears. Weak data continuously has been coming through from the US. The ISM data yesterday, the manufacturing data, was bloody awful. And it's sort of preempting the continuous data that's coming through from the US. Especially, obviously, we got NFP on Friday as well, which isn't going to bode too well. If that NFP data comes out and it's pretty negative, I mean, I can only imagine what that's gonna do to the US confidence in economic terms. So it's not looking great. It's not looking too sharp for the US whatsoever. Now, yeah, I mean, these moves that we had in the stocks yesterday were pretty extreme. We saw, I think, off the top, a 3.4% decline from the high to the low yesterday. I mean, this trading view is showing 3.54, but I think if that's what TradingView says, that's what TradingView says. But I've seen on the reports that people are saying it was a 3.34% move. I think JP Morgan's post said it was around 334, lost on the US tech stocks. The S&P 500 was absolutely extreme as well. Bearing in mind the daily high on Tuesday, that was Mondays, wasn't it? Yeah, so the daily high Tuesday down to the low of the day there was 2.81% on the Standard & Poor's index. I mean, that's extreme given the fact that how old the Standard & Poor's index is in comparison to an infant like the US tech stocks, the Nas. So, I mean, it just goes to show just how bad a state of affairs, the sort of major institutions think that the US is in at the moment. Quite interesting as well in a sense. Obviously, I wouldn't consider the data to be too aggressively low. Really, it's been softer coming out of the US, but obviously they're looking at something that I'm not. They're seeing something I'm not. I definitely wouldn't deem the moves in the stock markets versus the data that's been coming out from the US. So it's interesting to see the market fluctuations and how sensitive individuals are at the moment to that softer data. You know, it's got to be good data or it's nothing, or it's smoke. So, looking at the Nas 100 at the moment, nice price equilibrium area at the moment. We have been range bound here for the majority of the day. As I said this morning when I first came online, the likelihood is that these US stocks to flip flop majority of the day. We might get that price action pullback this afternoon, and so therefore my instantaneous US market forecast is going to be the long breakout of 1892 up to the 19061 area. And that's going to be the trade idea for the day. I mean, I think I sent out even a potential trade this morning. Nothing's actually happened since then. So the trade for today for the Nas 100 is a long, and I'll be looking at around that for the long, just so everyone's absolutely clear. I don't need to spend any more time on it, to be honest. It's really, really simple. Now, obviously, this was an unmarketed, uncampaigned event for individuals as well in the broader community in the UTC. We've actually only had one extra individual join, so thank you, Paddy. I guess everyone else is at work or whatever, or just didn't hear about the event enough, I suppose. I mean, marketing it the day before is probably not the best idea. I just wanted to test the functionality really as well, more than anything. But for the sake of you guys, I don't need to explain the situation any further than this. It's a breaker structure trade. We're looking to take it up to the next previous major level of liquidity. The cash rich area in the chart at the moment is coming from this point here in the Nas 100. We've got a decent price equilibrium. Once the positive imbalance is confirmed, We've got a really nice area for the stop. It yields a really nice risk reward ratio. And I'm only going to be risking 0.25 as always on this trade idea. But we are looking at over a 0.6% return. So it should be really nice. It should be good. So that's that for the NAS. Now, in terms of everything else, we are pretty much there. I mean, we've got empty books. We've got a clean slate. I was intending to fire out a long in gold for you today, which has already been completed. I didn't even miss the entry opportunity or anything, but I was farting around trying to get these automated signals to be sent out in the Discord server. Unfortunately, I just didn't. I just wasn't focusing on this. Taking a bit of take my foot off the gas a bit, I guess, with the trades this morning, and after everything that happened yesterday. It's a real shame about the signal thing as well. I'm not admitting defeat on it yet. I mean, frankly, I've only spent a couple of days, working out the kinks in it. But I fired out my first test this morning, which went really well. I mean, it was a piece of cake. And then as soon as I load up the magic keys, the whole thing goes belly up. And I know you guys have been kind of following along the conversation, but it doesn't actually look like the two will work together. So yeah, it's a little bit of a kick in the teeth. Not the end of the world, of course. I mean, at the end of the day, I'm used to doing it manually. But it's just a shame, right? It's a shame because obviously if I could streamline that process, it means my time could be better spent elsewhere. But that's more of a moan, not anything else. So it's fine. I will continue on as is for the time being until I get confirmation back from the developer who made the EA just to say, yeah, unfortunately this is going to be overwritten and there's nothing we can do about it. Or you come back and say, listen, I'll write an updated version with a new patch note to say that it won't be. So we'll have to wait and see. I'm not a developer at the end of the day. I don't know anything about EA, so yeah, we'll have to wait and see. So anyway, moving on. Gold at the moment, had a long, looks really good. It looks quite nice for a short, not gonna lie. Liking this breaker structure area in here. So possible BOS down below here. Target profit's going to be there at around 24.77. Stop loss, nice margin above the area in here. Based on the fact that this is the breaker structure, the risk reward isn't going to be too good if you go for the high for the stop. So this is going to be a pretty small, pretty tight trade. It's going to be done in the space of maybe a half an hour to 45 minutes. I'd be looking for something like that. If we break the structural point, this then becomes the new structural point, right? So then that's why we can have the stop loss here and we can afford that kind of risk reward. So that short in gold's looking pretty decent. I'm going to log that in. That's good. That's a pending that's going live. Now, looking at the rest of these assets at the moment, I have had quite a broader look at where we are in terms of the bigger picture on most of the assets today prior to coming onto the session. Simply put, because I was looking to update our order book and get some ideas out to you guys. Unfortunately, and I'll let you down ahead, I'll just let you down now rather than getting through to the end and being like, well, there we go, there isn't really much to look at. Most of these assets are not tradable right now in what we're looking for in terms of trading away from those major inflection points. Unfortunately, price action yesterday got slammed and really slapped about, and as a result of this, most of the assets that we're about to look at are trading either directly into major areas of liquidity and not completed their cycles yet, or they're trading in dead space, i.e. no man's lands. They're kind of floating around in the middle of something. So for example, I mean, this Aussie CAD is not really too much of a bad example, but we really don't know where we're going next with this one. We've got a big break close retest. If the retest fails and we get the breakout above here, then we've got a fair distance to go right up until the previous high, which means we're going to be probably in this trade longer than we have in the trading week. So if we look at this being the major area of liquidity, we have a breaker structure level probably about here, I would say, is a good one. So then we take the trade idea above there, and then we're back to taking the trade up to the previous high, which was this area in here. Then this becomes the trade idea. Now that's not a bad trade idea at all though, I haven't got any problems with that one. But we're not close enough there yet for a pending order to be put in the market, that's what I'm saying. And so for that, it's a 1 to 2.84 return, really nice solid return. We have a TRF, the TRF sits at about this area here at 91.41. So because of this, we've got inflection points along the way. We're going to have a pretty decent trading margin. We'll be just sub a 1-to-1 by the time we get to the first TRF, which isn't any kind of, as you guys know, it's not an indication that we cannot get into the trade, but it's just a ways away. Now, if we want to be taking a short in the Aussie CAD's short breaker structure area is probably going to be somewhere about there, I would say. And then obviously we're going to be taking that short back down to the previous low, which is the inflection point, prior to the rally. And that's not a bad trade. We could probably get the pending order in for that one, to be honest. So maybe a 1 to 2 there. But we've got a really big no man's land, right? This whole entire area here is not to be trifled with. So we've got a fair time to wait. That's what I'm saying, fair distance to wait. So Aussie yen, this is a dead space trade, or dead space asset, shall I say. Big area of liquidity here. No point taking a breaker structure trade to the previous low because there's not the margin in it. We get a break close and a retest above this one. The breaker structure area is going to be arguably in here. Yeah. So that would be the breaker structure entry for the long. And then of course you've got a margin there. You've got the one directly above. You've got the one directly above. Okay, and now things become crazy. How do we actually navigate this Aussie yen? It just becomes a little bit messy now. So this is what I've been finding with a lot of them. So I think with the Aussie yen at the moment, the best course of action for a breaker structure trade is to go to this major area of liquidity up here, just the big one. Don't worry about any of the others in the process, the midst of things. Just understand that you have your TRF, which sits at approximately 98.32, and then that becomes your long trade idea. Now, bearing in mind, guys, we've just looked at the Aussie CAD for a similar size trade. Yeah, I mean that's a 1 to 3. That's a bit too crazy for me. So probably looking at around a 1 to 2.5. Right. So this is very similar size trade of the Aussie CAD. So we want to be aware of that. No shorts available in the Aussie yen at this stage. Okay. I'm like paranoid now and keep checking the chat to make sure people are saying they can still hear me. Aussie NZD. So Aussie NZD at the moment, obviously this one's been quite a good player for us. We've taken a couple of wins in this one recently. I think it's still probably got one more go in it for us. We've got a nice ascending level. The ascending level rallying up through here. Seems to be sticking to that one pretty decently, so I'm going to leave that in my charts. We've got a very, very nice cash-rich area here, which is what we've traded away from and up to before. And so now we can kind of build that picture on the 15-minute chart saying, okay, this is, a decent little, very volatile wedge that we could be trading in. There's a good trading margin. So if we look at the 15s kind of zoomed in a little bit so we can see things clearer, we have, this series of highs all the way through here. I would probably be leaning on the side of having this as the structural point and not the lower one for the BCR, suggesting that we could get straight into the trade. So I will now be waiting for this to now break the structural point, which technically speaking, will be the top of that move there. And then I could be looking to take this up to the same high that we've been trading to the whole entire time. Now, there is a TRF, and the TRF is probably going to be situated at around this area in here. Usually 50% point of your trading margin. Usually that's where it sits. So then the trade idea you can take, there's a trade idea here, definitely, for a 1 to 2, but frankly, I'd be looking to take the trade idea right the way to the top again. And that's not out of greed, okay, because we're not looking for a much of an increased risk-reward ratio, but we are, by executing this position instead, looking at incorporating the big level of liquidity below inside the stop loss. So we've got this big one, we've got the little breaker structure area, and then we'll ride the run right the way up to the 108.96 area. Now remember, guys, that this again is a relatively large trade. Price time duration on this one, you're probably looking at around maybe 8 to 12 hours, maybe. It could be done it could be done in 2, it could be done in 3, we don't know, but I imagine it's probably going to be a little bit longer than that. And we're now at 3 Aussie trades. Okay, so you really want to be thinking, is there actually one that I like better than or less than the other 2, and then taking 2 of the best ones? Or you can, as an alternative, cut your risk down, 0.2% each trade, and then you're absolutely fine that way as well. Aussie dollar, dead space down here, no short opportunity because of the inflection point here. No long opportunity because we're directly underneath a relatively significant intraday level of S&D as well at around that 67.35 area, so there's no opportunities there. CAD Swiss, dead space trading, we're like kind of in the median of this sort of run at the moment here. Could go low, could go long, we don't really know. The trading margin for the short is non-existent. We don't want to be taking a trade idea on the upper half to the top really in this space because it's quite tight. If we look at this area in here being our area that we need to cover before getting out, getting in, then the trading margin is significantly shortened. And so therefore we don't really have that decent margin there to trade. So CAD Swiss at the moment, unfortunately, is going to stay out as well. CAD Yen. It's a grind fest. 2 currencies both weakened at the moment. We've got a relative floor starting to form. Okay, so we could utilize that information possibly. Looking at the floor down here, we could look at the breaker structure point on this 15-minute time frame, which would probably be there as your BOS. Your long target is going to likely be, I would say, at about here. Now that might look shite looking back in time, but I think in terms of what's probable up and coming, this is probably going to be one of the best routes. We've got highs along here, inflection points big enough to really send the market away with quite a force. We've got an M reversal, which uses it as the midpoint here. We've got the break close retest at this point. We've come down and got the rebound breakthrough retest. It just carries enough weight for me. And so therefore, let me just, that's the floor. And my break structure area is going to be, I don't know what happened to it, but that's going to be the break structure area. So then I'd be looking at a CAD Yen long. With all your normal trimmings, so target, entry, stop loss, probably looking at around a 1 to 2 on that one as well, so that's looking quite good. Euro against the Australian dollar, breaking down. Is this the turning point of the trend or is it not? Intraday levels there, right? Previous next major inflection point prior to coming all the way back down to the beginning of the rally. Problematic situation is the fact that we have an even larger inflection point with much more gravity directly above price. Now we're in a no man's land. Problem number 3, if we take a breaker structure long trade on this one for a trend continuation, i.e. this being the new trend, our trading margin is extremely tight between the 164.60 and 165 areas. Okay, not in terms of pippage, but in terms of just simply distance. So
it's sporadic. I mean, there's a liquidity point there, right bang in the middle of all of this. It's a little bit too far back, so I'm not going to draw a zone in there, but it's worth knowing. It's worth taking note from. So what I'd be saying actually is let's use this as the breaker structure point, I guess. If you want to take the Euro Oz trade, you're going to look for a retest of this area, then the continuation. This is a must. It's non-negotiable. Market must push into this area, then break structure above this area. So then, we can just do something like this and then up from there. Okay, so that's what you'd be looking at. Your trade idea for this one with your spread, which is going to be about 0.8, hopefully, I should imagine on retail brokers at the moment, 0.8 to maybe 1.2. You should be looking at a pretty decent risk reward for that one as well. So maybe around a 1 to 2 on that one. It's a small trade. It's pretty damn tight for an intraday trade, but definitely doable. Euro yen, I don't want to trade any more yen pairs right now, and I don't like any of this, what's been going on here for a couple of days. Euro NZD has previously been quite good. Really don't like where it is at the moment. I mean, yeah, inflection point directly above there as well, so that one needs to be taken into account. We're trading at the moment on top of a much smaller level. We've got an M reversal directly above price. So, I mean, this is just getting better and better the further I analyze it. So, yeah, really, really tough one to call. Definitely wouldn't want to be taken along with this high. Definitely wouldn't want to be taking a short just yet, because then at the short, we're looking at around this area earlier, which was actually, as it happens, the target profit for a previous trade. So, we've got that area in there. That one comes across here. So we've got this low, which goes nowhere. We've got this rebound, which goes nowhere. Interestingly enough, though, if we just widen each side of the zone, we've actually got a pretty decent level of liquidity in there now. But the thing is, if we take another short down here, we've got blocks all the way back down. The only trading opportunity that there really is here is the breaker structure there, back down to this low. And even then, you've got a really big TRF. So Euro NZD shorts at this point are not worth looking at. The long, unfortunately, isn't worth looking at either, which means we're just going to have to sit tight and wait, be patient, get the breaker structure above the 179.65 area, TRF at 180.16, and then take the target profit out at around 180.50 for around 100 pips. And that would be the best course of action for the Euro NZD. Nothing to be done on it at this time. What I am quickly going to do, that one's both, so I'm going to put that as a blue. This one is a long. So that one's going green. This one is a long, so that one's going green. CAD Swiss, CAD Yen was a long. God, doesn't bode well, does it? Euro Aussie was a long. Okay, Euro NZD, Euro USD, nothing on that one, nothing on that one, nothing on that one. Okay, cool. Right, so GC. Looking at the GC at the moment then. Yeah, not a superb piece of price action to be working with either. So we've definitely got the double top, which is looking pretty good. We've got a POI at this area in here. What's that margin like? That actually looks... Is that doable? I don't know, man. That looks way small, doesn't it? No, I'm not really liking that. No, even if I tighten that up, no. Yeah, that carries weight, so I do like that. That's okay. Nah, that's bottom feeding. Not interested. Pound against the Swiss. Swiss is dying a death at the moment. Pound's had a good rally against it. Dead space market though, trading right bang in the middle. Right against a relatively big TRF at the moment. Major inflection point 111.11. We got another major inflection point of 112. So really nice trading margins in this G Swiss. The only problem is, guys, we're trading right bang in the middle of it, so there's no trading opportunity in that one either. Pound against the yen. Standard yen cross at the moment. Lots and lots of grinding. It looks miserable. So, yeah, we don't want to be touching a miserable chart. It looks very sad. We're not sad. We want to be happy. Where's the happy charts? Cable. Nice little flag formation on the daily time frame. I can tell you that much. Maybe the 4 hour, possibly. No, daily. So that's looking okay. This one could turn out to be quite nice if we get the breaker structure right. Get that big bullish breaker structure. Where's it going from here though? Because it also looks like at this stage we've got a daily break, close and retest, doesn't it? That's what that looks like to me. A daily BCR liquidity. Where's the actual daily trading right now? That's a full breakout. That's a full retest. So that's actually looking really decent for that sake. Where's that one? That will be this point here. Probably have a little bit of trouble getting through it again. That's not end of the world. And then we could be looking up at around this area in here. Okay, around 133.80. What was that? 133.70. 133.70. So that's not too bad. We get a break of the flag here. Nice BOS. That could be a really decent trade. Not a small one by any stretch. Quite a large move. You can see how precise these levels are on the 15-minute time frame here. Really, really decent analysis that. There we go. Whoops. So yeah, and then what am I doing? I'll just copy and paste that. Make life a lot easier for myself. There we go. That's the run that we're in at the moment. Wait for the breaker structure above, and then we can start getting on our way. Cable still might be nice. I mean, I've had a lot of long pendings in cable that I've had to remove all the time. But no, that is looking okay. So I think we get that sort of trigger point taking place. I'm not going to send out a trade idea in this one at the moment, team. Okay, but I want you to watch it. Watch the breaker structure at the upper limit. Okay, when that upper limit gets broken, let's see what else it breaks through. Well, is it going to break through this, for example? This is a good one here. So if we get a breaker structure through this area, then we've got a decent trading margin up until around 130, 180. And if we break through that one, then we've got another good trading margin up to 132.30. Each of these blocks in the liquidity is yielding quite a nice return. That's the kind of thing we want to be focused on. Not the old pound yen or the pound Swiss, which have no return whatsoever because of where they are. Cable, a little bit different in the move. You know why it's different? If you look at the pound Swiss or the pound yen, sorry, not the pound yen, the pound CAD. Look at this pound CAD, right? Perfect example. We can't really trade the pound CAD now. However, if we had the foresight for the pound CAD when it was originally in its flag, like this, then we would have known that we could have got the breaker structure trade from here, and we would have been up at around that 177.86 area. Even better would have been the fact that we had this run from the lower limit there. Breaker structure down there. I mean, that would have been great. What a beautiful bit of hindsight trading. So when we look back at cable, to be fair, we haven't actually had that run down to the bottom yet, have we? It would be nice if this was actually struck. If it's not, then so be it. That's fine. But it would still be nice to get in at the beginning of this inflection point. Obviously, the two charts don't look identical, but the fact that we've come down to this point here, this could be the beginning of the inflection point, means that we could soak up a lot of that profit before we get to the previous high in cable. Bearing in mind our stops are going to be down here somewhere. We're looking at a 1 to 2.6, maybe a 1 to 3 return before we even get to that next major inflection point, which is up there. Don't need that. So that could be really nice. We're not there yet, but it could be. NZD CAD. This doesn't actually look too bad. Unfortunately, I don't like the high just to the right of where this zone starts. So I would want to break that. The actual structural break, I'll tell you what, to make it even easier for you guys, if we break above this, then I'm in. Put it that way. Just following my price line back. Yeah, actually, to be even safer, that is the best path of least resistance, which means actually the entry is a mile away from where price action is trading at the moment. But that is what it is. Nothing we can do about it.
And so the trade then becomes the breaker structure trade, entry, target, stop loss, 1 to 2.3 ish. I think to trade down here, you're going to be running into a lot of problems. Got this area, you've got this area in here as well, right? So several major 15-minute points of interest before we get to the really nice one. Then we kind of clear out the noise and we can just soak up these moves. Okay, next up, NZD Swiss. To be fair, yeah, it's actually nice. That's actually pretty decent. Right at where the price line is now. What's the... Oh, no, it's shite. No can do. Probably why I didn't say anything about it, isn't it? Right, scrap that. NZD Yen. I'm just not liking any of these at the moment, so no. NZD USD. This could be nice. Yeah, this could definitely be this could definitely be good. We got this area up here, don't we? That's the big one. So then we're looking at a BOS above this area. We get that BCR already implemented at some point. We get the break of structure, and then we get in for that move. There is what is that? There is that area in there, isn't there? This is what I'm saying about a lot of these moves at the moment. They've caused a lot of mess. Not very good for the housekeeping. Because now the trading margin is actually pretty crap, isn't it? Nah, I'm not having it, guys. No, I'm not having that one either. Our scaled positions in the USD CAD came within a stone's throw of our target profit, and now heading back down. So that's great, thank you very much. Can't do anything more in there. USD China. It's in a little bit of a rough spot, dead space, right bang in the middle. Big area of liquidity directly underneath, bigger area of liquidity above. We also have a bit of a descending level that probably should be articulated. Yeah, that's a good one. So descending level as well, directly above price. We've got really quite a significant area, cash rich area here as well. We're just in complete cash neutrality at the moment, guys. Probably why it's flip-flopping so much. But yeah, nothing to be had in that one at the moment. USD against the yen would have been really good if we traded a little bit lower. We're kind of just stalled at the moment. Neither currency wanted to push anywhere. Really big point of liquidity, actually, this one. Really big. Could be looking at a move up, potentially. We know what my track record's like with USD yen though, team. Take it your own risk. Yeah, I'm not sure. I mean, if we look at the two major inflection points in price, one's up here, one's down there, this is the midpoint. Right, so we're trading middle of the range. The range is big enough, to be honest. It's big enough for us to take a trade happily in the upper or the lower halves, but happily from the high or the low, not directly from the middle. And so USD yen, gonna have to sit that one out as well. This is what I mean. This is what I meant, guys. Unfortunately, because of the market volatility that we have had recently, and especially after yesterday's craziness in the stocks, it does make things a little bit tricky. But that's fine. I mean, let's be fair. The amount, gains that we had last month, like I said, it just doesn't continue like that permanently. So it might just be one of those weeks, and hopefully things can sort of land on their feet beginning half of next week, and we can start filling out the books again.
Alright, well, I already did the NAS 100. The NAS 100's here at the moment, continues to flip-flop between these two areas. Hopefully we're going to get that breaker structure. It's 2:15 at the moment. I cannot reason with further shorts based on the economic data at this stage. If tomorrow's data and then argue, more prominently Friday's NFP data, if it's showing weak, if it's showing weaker numbers, then by all means we'll continue shorting the hell out of it. But at this stage, a 3.3%, well, according to them, 3.5% according to me, sell off in the NAS 100. What and then this for the price action pullback the next day? I don't think so. Look at the daily chart. Dailies don't lie. All right, look at the size of that daily candlestick. Okay, and look at these other candlesticks. Now, if we go back on a we won't be able to on a 1 minute time frame, but if we look at 15-minute waves of these moves, generally when we have one of these big moves, we have flip-flopping, but then quite a big nice price action pullback. And then we have this, and then big price action pullback. This pullback. This ended up being a grind fest, but then really pulled back really nicely. Pullback, 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 and so on and so forth. I mean, this is the structure of trending markets, right? I don't have the belief that the market is going to do this and then do that again. I just can't see it. So pullback day for me today. US 30 Dow Jones, all of the US stocks, to be fair, folks, have the relatively same understanding today. It's going to be corrective day for me. Looking at this one at the moment, major inflection point. Again, it's exact same as the NAS 100 trade. Going to be looking to take in the breaker structure. Just clear out the wicks. Make sure your entry's above the wicks of the move here, just for this particular one. Target profit's going to be arguably, I'll probably put that down a little bit lower, to be honest. Maybe there, for example. Have your TP about there. Stop loss going to be nicely, I don't know, maybe around here, for example. Yeah, something like that. So that's a little 1 to 2.2. NAS 100 is obviously quite a bit nicer, 1 to 2.67. Not hugely, though. And, we'll see where we go from there. So there are some things to look at. Obviously, predominantly in the fund at the moment, we've got quite a lot of exposure in the Australian dollar against a multitude of crosses. We've got double exposure in the Japanese yen. We've got triple exposure in the Australian dollar. We've only got single exposure in the euro as well. We're already in the USD CAD, so Canadian dollar 1-2. Actually, we'll have triple exposure in the Canadian dollar as well. But because of the fact that we're looking at different trades, we're going to be buying and selling the CAD in a couple of them, so that's fine. Gold at the moment, we only have one expected trade to be triggered in this one for a potential short down to the lows there. So that's that, and that pretty much wraps us up. We've got a clean book. So these pending orders, this is now our new book for the latter half of the week. Just before I go, the fund at the moment is doing quite well this month. We're on the third of the month. We're up 2.47% so far. The latest trades don't really do it too much justice, taking a few losses, but it's not looking too bad at the moment. We did have a 3.23 day based on those two major stock wins that we had in the Dow and the NAS, which added a really nice chunk of money. We also had a couple positions that were executed in the middle of the night, pending orders that triggered and then came into play the following morning, which have all been adding to that. So it's been pretty good. It's been pretty good so far. We're only right at the beginning of the month, so we'll have to wait and see how things fare. But that's going to be it from me today, guys. I hope you've enjoyed this session. I know it's not may have been as action-packed as some of them have been. But at the same time, we do have lots to get on with, lots of orders now we can sort of go through and add to our books now. And yeah, I look forward to catching up with you tomorrow. Now, I actually don't know. I actually don't know what tomorrow's going to look like per se. So, no, sorry, not tomorrow. Tomorrow's going to be the same time as always, 1:30. I'm talking about Friday. I'll catch up with you tomorrow about Friday. That's fine. Right, guys, you've got any questions? Any questions at all, please? Fire them over. Excellent. Good. All right. As long as you know your trading plans, then you're going to be absolutely fine. So, guys, have a good one then. I'll leave it there. Have a great day. Good luck this afternoon. Obviously, I will be present and trading in the lounge, so I will catch you there in a moment. Take care, guys. Good luck. Trade safe, and I'll see you later. Thanks, then. Bye-bye.